I clearly did not see that coming, but I do expect Tesla to continue the march to 300 and maybe beyond. There's basically no reason for it not to. The fundamentals are there, the technical support it, and I think we'll go 300, maybe into the 305, 315 range within the next couple of weeks. This morning, the Dow is down, although it's trying to get into green territory, but not nearly as strong as the NASDAQ and S&P, back to the regular pattern for this year. Tesla is way more than the Dow this morning. I'm sorry, Tesla's up way more than the NASDAQ, definitely way up more than the Dow, as it continues to rally and be disconnected from the indexes, which has been also the trend over the last 3 weeks, roughly. The other tech stocks and the Cathie Wood stocks are also up in early trading, but again, Tesla's just up way more. Oh yes, I wanted to let you know this. This is Randy Kirk. I'm sorry, I seem to be a little more tired this morning than usual. This is Randy Kirk. Love the fact that you guys have responded to my call for Patreon. We got a whole bunch of signups yesterday. I think it was the best day ever for Patreon. Definitely marching towards that 100 number. Maybe we can get right through it. We're sitting, I think, around 88 this morning. So really strong, positive. Only with a week to go. 7 days of activity before to hit that 100. I think with only 12, we can do it. Come on, sign up. The information is down below. Hit like, hit subscribe, hit notify if you like getting these morning shows. You want to be reminded about them. I will be doing my 2024 numbers later today. I did the 2023 yesterday. If you didn't see that, I'll put up a card later. All right. As projected, manufacturing PMI was up a bit and services were down a bit. That was a little bit of a surprise for me. I was not expecting that. No real impact on the Dow yesterday, other than it continued the narrative that I talked to you about yesterday in the video I did midday. If you didn't watch that video, you definitely want to go back and watch that one. This is a major new direction that I'm seeing with regard to the overall narrative for the market and an overall narrative for Tesla. Very, very, very important if you didn't see that yesterday. Okay, well, the Case-Shiller Housing Price Index is down 0.5 this morning. That's 1.7 down year over year. That will turn out to be a nothing burger for today because that's what the market was kind of expecting. It'd be nice if the Dow starts to get that housing prices are down, rents are flat compared to last year. This should be the major thing that they're concerned about. They say it's a major thing that they're concerned about, and they are both doing what the Fed is asking them to do. We'll talk more about the Fed later. Consumer confidence numbers come out later today. We'll report on those in the morning. Headline. Here's a headline. Economists have put off the recession again. Now it's about a year from now. What? No recession, no recession. There's not going to be a recession. Oh, well, there'll be a recession someday because you have to have a recession from time to time to clean house. Did you know that's why recessions are necessary? Recessions are to get rid of the folks that shouldn't be in business, to get people to rethink whether they've hit their Peter principles in terms of their jobs and get them to take a job that they can actually handle, or sometimes just to give them more time to build up their capabilities. I'm going to be doing another video later today, I think. I expect it to get almost no views, even though it's really, really important. I'm going to be talking about a new theory I have that we are entering into a very significant increase compared to the last 3 years, at least, with regard to efficiency, with regard to economies of companies being much stronger in the way that they're making their money. All right. So now I read about, back to housing, I read about 2 to 3 articles on housing every single day, and none of them get it. It blows my mind that people get to write articles and that they actually get published and that people actually pay attention to them about things that they are woefully unsuited to write. An article today said that prices had turned around. They were down, but now they're going up. Yes, that is true. They got that part right. But there was no context other than the Fed rate increases were not having the desired effect. There was nothing about the fact that there is no inventory. All the things that we've been talking about on this channel for months and months and months. And maybe the Fed reads these articles instead of actually looking at the stats. I just can't figure it out. Anyway, I'm sorry, another rant. About a week ago, I started talking about a possible rebound in inflation from normal pressures, not this crazy thing that we've been going through, okay? Normal pressures, a little bit of a possibility that we'd start to see some kind of upward pressure in inflation. Well, some financial writers must be watching the show because now articles are popping up with this thesis. This might be the Fed's worry, and maybe they really are looking at trueflation because trueflation is definitely showing a little bit of increase now. Not dramatic yet, not enough to get worried about for the immediate future, but if the trend continues, yes, we're still sitting around 2.5, according to trueflation, and that could be where we get stuck between 2 and 3. And the Fed has said this, but it talks about it in terms of we haven't done enough yet. That isn't the case. There's 2 different inflations that we're worried about here. One of them has been with regard to all the shortages and all the supply chain problems and everything else, which caused this boom bust effect. We have now gone through that. Now, the question is, where are we going to be going forward? Watch oil and watch labor, of course. But oil, I think, is the big one, and oil is now up. Actually, down today a little bit, but overall, it's up in the higher end of its trading pattern. I'd really like to see it settle back down closer to 70. That would give me a lot of confidence that we're going to get through this without any more inflation. But what you're looking at is the possibility that the Fed is watching these new numbers in trueflation popping up just a little bit, and that could cause a hawkish statement today, and that would temporarily at least hurt the second leg of the bull market right now. I think the overall deflationary trend is much stronger than these minor upticks, whether it's residential housing, whether it is food and beverages, whether it's transport, which are 3 of the biggest ones that we have to worry about. But that doesn't mean I think that we're at 2% and can maintain 2% over the next 12 months. That is the big question. All right, Alphabet later today. They'll be reporting. The key on that one is going to be whether advertisers are getting more active. That's what you're going to be wanting to look for. Are advertisers back in the game? Is Alphabet giving us guidance that things are going to be better for them as advertisers get stronger and more interested in advertising? I've been in advertising my whole life, but for 20 years of my career, I was in the promotional products industry, and we saw it so fast. We saw it happen so fast. Businesses kill their marketing departments and kill their advertising as soon as they're worried about sales going down. I mean, it's like the opposite of what they should do, but that's what they do. That's what we've seen over the last couple of years. With the strength of the Dow, and the strength of the overall market, and the slight, okay strength, 1%, 2% strength that we're seeing in the economy, will advertisers be coming back in the fold? So people will care about that more for the overall theory that they have about the market and how they're going to invest, way more than they care about whether Alphabet's doing well or not. So turns out this morning we're seeing that Tesla is building an Australian FSD team. Aha. Seems like they're getting really confident about FSD being here shortly. Remember, earlier this year, they were building several FSD teams in the United States just for 3 months, though. That was my interesting point about that. Why did they only need them for 3 months? They only need 3 months of data of the type that these teams would get in the US in order to get finished whatever it is that they would be doing. Anyway, I think that's interesting. All right, beats this morning. I'm not going to always report all the earnings reports, but these are pretty important ones. Spotify, 3M, General Electric, and Xerox all beating and giving good upbeat guidance. Only Dow Chemical was an outlier, and they definitely had grumpy guidance. But this kind of imbalance in terms of lots of good guidance and lots of good beats will definitely help the current leg, I call it the second leg of the bull, keep going. Bonds are up strongly again this morning, though. I think they're anticipating. They want to know, what is the chairman going to say on Wednesday afternoon after the market closes? How hawkish is Chairman Powell going to be, or will he be somewhat dovish? Will he give at least a chance that we could have another pause in September? I would expect 10-year yields to drop back into the 3.5 range if there's any dovishness implied in tomorrow afternoon's reporting. Okay, I said yesterday that all the auto CEOs had given up on catching Tesla, and I still am saying that. That's what they've said. However, today, Mercedes, or yesterday, I'm not sure when it was, they said they're not planning to catch them generally. That's not what they said. That I'm paraphrasing, but specifically, their plan is to be number one in the luxury category of BEVs. They're going to spend $45 billion to try to make sure that they cement themselves as number one in luxury BEVs. They're betting part of that money on their own FSD program. I'm saying that they will lose that bet and they will end up getting Tesla's FSD and maybe their entire software suite. Anyway, that's enough of that. By the way, a little more, speaking of, that kind of stuff, few more details on the loyalty rankings. Tesla coming in at 68% was a full 18% above their closest rival. No one else even had 50% in the BEV category of people that were being loyal to the brand, but rather people were switching out and going to Tesla in terms of their next car purchase, or their expected next car purchase. So once again, let's take a quick look at what's going on before we close out here today. The bonds are still up around 3.896 yield. Oil is still down just a tad, but still up at 78.72. That's in the higher end of the range. The Dow overall this morning is still down, with the NASDAQ still up strongly. All of that was just as we said a few minutes ago. Now let's take a look at the Tesla is bouncing around between barely up and a couple of points up, sitting right around the 270 level. Again, I mentioned before, I continue to believe that Tesla will be bouncing around. They will not go, this is not a straight shot to 300. This can be up and down, all for the next 2 weeks, but trending up towards 300 and then maybe breaking through. Depending on the market, depending on the mood, of course, all those things are going to impact, just as I've been saying for quite a long time now. So right now, Tesla is up, and all of the, let me just take again, the Cathy Woods are bouncing around a little bit too, and the techs are all up. Okay. Remember, again, support me on Patreon. We're trying to get to that 100. That information is down below in the descriptions. Just a quick click on that. It'll take you directly to Patreon, where you can sign up for 7 days free and see the rest of my spreadsheets and the other videos that I've created there that are unique on Patreon, only place they are, and they're all still just as current as they were when I made them. So these would be very useful for your planning. And then, of course, hit like. Did you remember to do that? Make sure you hit like. This really helps me. And hit subscribe if you haven't done already. Buy the book. And then I think that's it. I think I've covered it all. It has been great talking to you this morning.